Good morning. I'm Andy Myers at Weiss Research, and this is your morning market alert for Wednesday, November 24th. Stocks on Wall Street are set to open modestly higher following a heavy dose of economic data. 407,000 Americans filed for first-time unemployment benefits last week, 34,000 fewer than the week before and the lowest level all year. But orders for durable goods orders fell 3.3% last month, much lower than expected and the biggest drop since last January. Meanwhile, personal income in October rose 0.5%, slightly higher than expected, and consumer spending grew by 0.4%. But most importantly, a closely watched inflation gauge within the report rose just 0.9% on a year-over-year basis, a record low. Later this morning, we'll get reports on consumer sentiment and new home sales. The economic calendar is busier than usual today ahead of the Thanksgiving holiday. Markets are closed tomorrow, and equity trading will be limited to a half day on Friday. Stocks around the world tumbled yesterday after news that North Korea had launched an artillery attack on a South Korean island, and concerns about debt problems in the Eurozone also weighed on sentiment. But today, European markets are rebounding from 6-week lows, despite continued weakness in the banking sector. According to multiple sources, the Irish government will take control of Bank of Ireland. The government already owns 36% of the bank, but reportedly could act within 72 hours to take a majority stake. Ireland may also boost its stake in Allied Irish Bank to 99.9%. Following the country's request for a bailout from the European Union and IMF, Standard & Poor's cut its rating on Ireland's debt by 2 steps. Investors have been selling the government bonds of Ireland and other European countries on concerns the debt crisis will continue to spread. The German software giant SAP could be among the biggest stock losers today. It's falling more than 2% in pre-market trading after a jury said an SAP subsidiary stole intellectual property from rival Oracle. The verdict was for $1.3 billion. SAP had argued damages should be more like $40 million and said it could appeal the verdict. Oracle shares are jumping nearly 2% on the news. Shares of Tiffany are also on the rise after it reported a 27% jump in quarterly profit and boosted its earnings outlook for the full year. Tiffany is also one of the luxury retailers that Barclays is recommending in its holiday outlook. Saks and Polo Ralph Lauren are also on the Barclays buy list. In other retail news, J.Crew continues to be in focus. Both Robert Baird and Wedbush lowered their ratings on the stock after J.Crew agreed to a $3 billion buyout from 2 private equity firms. Meanwhile, Deere & Company is losing ground in the pre-market despite posting positive results. The farm equipment maker earned $457 million in the latest quarter after a loss in the same period last year. We're also keeping an eye on 2 food companies today. Barclays cut Campbell's Soup stock rating after it fell short of profit estimates, but Hormel was raised to a buy at Davenport. Soleil Securities had a different take on Hormel despite its strong earnings. It cut the stock to a sell. And Apple shares are rising in the pre-market. Barclays predicted that its iPad will post big sales numbers on Black Friday. That's the latest in business news. I'm Andy Myers, and from all of us here at Weiss Research, have a very happy Thanksgiving.